morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Tuesday, December the 3rd. Well, higher trade here overnight across the ag space. Beans actually just made some new highs here, trading about 8 to 9 better. Wheat prices are 6 to 7 higher, while corn is up 1 to 2 cents. In the products being led higher by the bean oil, which is about 80 to 85 points better. Meal is $1 to $2 higher. Strong usage figures reported after yesterday's close, I believe, were the key reason for the higher trade here overnight. The USDA did report corn used in the production of ethanol for the month of October reached just over 460 million bushels. Well, that was slightly below the average trade guess and down about 2 million bushels year over year. It was within the range of estimates. Also notable is the fact that we continue to see large upward revisions to the previous month's usage. September was revised up 7 million bushels, and this brings year-to-date usage to just the first 2 months of the 24-25 marketing year, but it brings it up to 908 million bushels, the highest in 6 years, and up 2% year over year, while the USDA's forecast is for less than a 1% increase. And I do look for this gap to grow significantly in November, as we've seen record production nearly every week. I look for a 25 to 50 million bushel increase in the corn usage forecast from the USDA in next week's WASDE report. Census bean crushed in October at nearly 216 million bushels, well above expectations and a new record high for any month. Production was up 16% from September and up 7% year over year. In the first 2 months of the marketing year, crush has now reached 402 million bushels. That's up 7% from a year ago versus USDA forecasts of up 5.4%. I'm leaning towards a higher crush figure from the current USDA estimate of 2.410 billion bushels. However, the USDA just lowered this forecast last month, so wouldn't be shocked if they just sit tight here in December. Along with the record crush, we had a record production of both meal and oil, but despite the higher than expected production, bean oil stocks fell to 1.486 billion pounds. That was down from 1.501 billion the previous month. And versus expectations for a mild inventory build. Stocks at the end of October were the lowest in over a decade, so big production, however, offset by bigger usage. After the close yesterday, we also got an update from the CFTC on the commitment of traders. It did show speculative traders were net sellers across feed grains and the entire soybean complex. In meal, money managers were net sellers of nearly 12,000 contracts. This extended their short position to about 75,000, within a couple thousand of a record short position. In total, money managers remain long corn, still long a little bit of bean oil, while net short beans, meal, and the entire all three classes of wheat. March corn so far failed to trade above yesterday's high at 435. However, rests just above its 50-day moving average. For now, corn seems stuck between 420 and 450. Jan beans, they're stuck between $9.75 and $10 now for the past 2 weeks, with over 90% of the Brazilian crop now planted in forecasts mostly favorable. To me, the path of least resistance remains to the downside. Longer term, we do have support at $9.35 for the spot contract. However, there's a lot of growing season ahead at least for a vast majority of the crop. I do look for a bean oil to test its recent high here at 43 cents. Good support below the market at 40 cents, as it does remain attractive in the global vegetable oil market. A new contract low yesterday for spot meal, and I do look for prices to gradually go down and test their 2020 lows at near $280 a ton. Wheat continued to hold support just above its contract lows in Chicago and Minneapolis. New lows in Kansas City. Improved conditions here in the U.S. and with Australia harvesting a crop about 5 to 6 million metric tons above a year ago, upside would appear limited. Thank you for listening, everyone. Hope you have a wonderful day.